So NIO stock has been absolutely on fire this year. The stock went down to about $2 a share earlier in the year, but then proceeded to skyrocket to over $50 a share. That was an increase of around 2,500%. That's insane. So naturally, the question has arisen: is NIO stock in a bubble? Is this a stock that is going to crash soon? Or does it still have room to run, especially over the long term? Or is this just another case of an overhyped spec stock that perhaps is being pumped up by a lot of inexperienced investors and also the broader market? Now, those are obviously not easy questions to answer, but I'm going to do my best to address all of them and share with you my personal opinion on everything that's going on. So I hope you guys enjoyed the video. It should be a lot of fun. Let's go ahead and get started here. Now, you guys already know NIO is this Chinese electric vehicle company, similar ambitions to that of something like Tesla. And that's really the reason why the stock has been shooting up by so much, because investors are hoping that this will one day become sort of like the Chinese version of Tesla. I'm not saying those comparisons are fair, especially at this moment with NIO being such a young kind of startup company, but that is the reality of the situation. You have to accept the fact that when you pump up the stock by this much, when it shoots up by such a large amount and develops such a crazy valuation, which we will take a look at in just a second, you have to realize that there are huge expectations for a stock like this. So, okay, let's go ahead and get started here. There's really no easy way of starting this video, but maybe the simplest way is to just pull up the stock chart. Let's see what kind of crazy valuation we're dealing with, and then we'll see if maybe we can figure out a way to justify it. Okay, so NIO IPO'd back in 2018, and at one point it broke just above $10 a share, which at the time was considered a gigantic spike. But what's funny is that now in 2020, you can barely even see that spike because the stock just shot up by such a crazy amount. At the time of taking this screenshot, NIO stock has climbed by about 2,500% from the lows that they saw just earlier this year, not even a full year ago. Now, this now gives them a market cap of close to $70 billion. And because the company is not yet profitable, we can only really value the stock based on sales, which puts them at a PS ratio, this is a price to sales ratio, of over 44. Usually a PS ratio of around 1 or less is considered a good value. So this is about 44 times larger than that typical threshold. And granted, very young and high growth companies typically see much higher PS ratios because they're expected to grow at a higher rate. But even if we said that a PS ratio of around 10, which is pretty high, even if we said that that would be acceptable, this is still more than 4 times that amount. That's pretty crazy considering that last year, NIO actually lost more money than they even brought in sales. This chart here is in Chinese yuan, but you get the idea. They lost more money than they even brought in sales. That's not a good sign. But to give you some context for how expensive NIO stock is right now, their market cap is larger than both Ford and GM. Granted, Tesla's is about 7 times larger, but if we look at this market cap compared to the revenue that they generate, NIO stock is actually about 2.5 times more expensive than even Tesla, and over 83 times more expensive than GM, and over 160 times more expensive than Ford. And this is a chart here of each company's revenue over the past year, just to show you how drastic that these differences are. NIO only brought in about $1 billion US dollars, while Tesla did over 28 billion, GM did over 115 billion, and Ford did over 130 billion. And when looking at profitability, again, all companies generate billions in operating cash flow, which is the profit that you make from just running the normal business operations every day, except for NIO, who actually was still negative by over $1 billion US dollars last year, which again is even more than they brought in their sales. In other words, I think it's pretty safe to say here that NIO stock is definitely overvalued. Super high valuation, not just compared to the broader market, but especially to their peers, from a technical standpoint. And we're dealing here with less sales, no profitability. I mean, these are classic definitions or classic signs of an overvalued stock. And we've got a pretty big bubble that we're dealing with here, that's for sure. But now it's time to see if we can justify all of it, and that's going to come down to things like competitive advantages. We're going to have to take a look at the competition, some of the markets, see how NIO is performing right now, and what they can still do in the future. All things that can technically send the stock even higher, especially over the long term. So let's go ahead and take a closer look. Well, on the competitive front, we've really got kind of two parts here. We've got the big dogs, the legacy players like Ford and GM, got number one largest, most well-established EV company out there in Tesla. But we should also take a closer look at China, though, because that is a little bit more of like a dynamic and more complex market there. And we do need to talk a little bit about the competition out there. It's a little different. So we'll talk about those two things. Now, with the big dogs, you've got the legacy players like Ford and GM. They've been really declining for years, and that's to put it mildly. They've been very slow to adapt to a changing market, and that's really hurt them. However, big changes are coming, and that could mean more competition in the high growth EV market. See, Ford is investing over $11 billion through 2022 to build at least 16 different EVs, including the Mustang Mach-E crossover SUV that is releasing next year and an electric F-150 truck releasing in 2022 to leverage their two most popular brands. GM is taking it a step even further, spending a whopping $27 billion through 2025. Again, remember, NIO only brought in like $1 billion in sales last year, but GM is spending $27 billion through 2025 to release at least 30 new EVs globally, with 20 planned for just North America alone. And that also includes some popular brands like reviving the old Hummer into a brand new EV. Granted, many of these vehicles will likely not have the same type of autonomous driving technologies that Tesla and even NIO do so well, and the larger trucks are also not likely to play a major role in China, where the average EV is obviously much smaller. But it just shows how many of these giant legacy players are investing heavily into the EV market that may become a lot more crowded sooner than you think. And don't forget, NIO does have plans to expand overseas, where they will be competing with, probably even more companies. Speaking of different markets, though, one of NIO's advantages at the moment is that it only really operates in what is by far the largest EV market in the world, in China. Still, even their competition is heating up very fast, and it may cut into NIO's future growth, which we'll also take a look at in just a second. But currently, or I should say as of September, there is not a single NIO vehicle that reaches the top 10 plug-in sales in China. Their new ES6 crossover SUV comes in just shy of that at number 11, while the Tesla Model 3 comes in at number 2, and it was actually well established in number 1 until the Wuling Mini, in partnership with General Motors, by the way, kind of interesting, until that one came out and dethroned the Tesla. But that's where we need to start taking a closer look here, because some of these EVs on the list are actually much cheaper and much smaller EVs with little range and no autonomous driving technology. So it's not really fair to compare them to something like Tesla or NIO. In fact, the Wuling Mini only costs around $4,000. I know, it's pretty crazy, right? I can't wait for that to come out to the United States. I would love to pick up a little, imagine owning a little like mini EV for only $4,000. That would be pretty sweet. Anyway, to get a better idea of how NIO is performing in their own addressable market, we should really be looking at fully electric SUV sales, which is all that NIO basically does right now. And we should look at those in China. And once we do that, we actually find that NIO has been the #1 bestseller for the past 13 months in a row. That's pretty surprising, right? Part of the reason why is because NIO has done a great job of staying relevant by practically releasing a new vehicle every year that customers get excited about. First, we had the largest ES8 SUV, then they came out with the smaller and cheaper ES6 crossover, and now we have the smallest and cheapest EC6 crossover coupe that released only like a month ago, all of which are already having large success, according to a report from the China Automotive Technology and Research Center showing SUV registrations in China for October. The ES6 came in first place, the ES8 came in second place, and even the EC6, which just barely released, already made it to number 9. That's pretty impressive there. Now, there are some issues though. NIO vehicles are pretty expensive, and even Tesla has had to dropped their prices several times in the past, and perhaps to stay more competitive in the crowded Chinese market. But Tesla, by the way, they're already gearing up to release a made in China Tesla Model Y, which is a like crossover, and the price for that one could be pretty low at a competitive level. In fact, some analysts are predicting that it could start for as little as just 275,000 yuan, which for context, I believe is around 100,000 yuan cheaper than the lowest priced NIO EC6, although that's not counting for subsidies or NIO's new battery as a service model that can actually bring down the prices of their vehicles by even more than that. They claim around 130,000 yuan. So you could basically get like the NIO EC6 and you could do the battery as a service model, and that brings down the price by like 130,000 yuan. That actually makes it cheaper than the cheapest Tesla Model Y, which is pretty interesting. And by the way, if you don't know what the NIO battery as a service thing is, it basically just lets you lease out their batteries since they're technically swappable, which by the way is also a great feature and competitive advantage of NIO, especially in China where most homes don't even have like EV charging. So swapping your battery out in less than 5 minutes is a great bonus of owning a NIO, but you obviously have to pay for that. Anyway, add to that the subsidies and the tax exemptions, and you are probably talking about a very similar or even cheaper price than what Tesla offers. Not to mention that in their next NIO Day event, which is going to be held in January, they're expected to release their very first sedan, which will likely help them compete more directly with Tesla's sedan offerings. In fact, the CEO recently mentioned in their last earnings call that they plan to release 2 sedans back to back. So this is a company that just keeps pumping out new vehicles. It's pretty crazy. And while there's other credible startups taking notice right now, like for example, XPeng and Li Motors, I always get comments asking me about those, both of which recently IPO'd and soared by over 200 and 100% each respectively in just November. I just really think that NIO has not only the better technology, but also a head start on sales. I made this chart here to show you how they kind of compare. NIO is in blue, and you can see that they bring in around double the amount of sales as the other two because they kind of started out earlier and they're already up and running at like a faster pace. And even besides doing so much more in sales, they still carry about the same growth at over 100% next year expected, which is also significantly larger than the larger players like Tesla, Ford, and GM. And the only reason Ford and GM are so high, by the way, is because they're having a horrific time this year. So it'll be really easy for them to have some growth next year. I think this year Ford is having like a revenue decline around 20% or something. It's like something crazy. Only XPeng really beats out NIO on the list, but that's because XPeng is obviously younger and still generates much smaller sales, so it's easier for them to grow. Although you could also make that case for NIO. But look, if NIO is able to maintain these pretty high growth rates, that valuation for them, that high valuation for NIO, it could actually come down pretty quickly. Anyway, the point is that we definitely have a very mixed bag here. We've got a very competitive market that will only see more competition in the future, but so far NIO has been doing a very good job of staying relevant in it and competing at a high level. And I've always said this in the past, if NIO can execute, and I'm a big fan of NIO, but if they are able to execute, this is a company that can become much larger in the future and eventually become a decent alternative to even something like Tesla. And don't forget, NIO does have very high ambitions. It's not just in China. They do eventually want to go out to Europe and then maybe even the States. And they even plan to do like a robotaxi partnership with Intel. So this is a company that does have a lot of ambitions, and the sky is really the limit if they can execute. And those are all things that can send the stock even higher in the future. But where NIO is right now, it does not make sense for the stock price to be trading as high as it is. When you're talking about a market cap that is larger than Ford and GM, who can still become very huge players in the EV market, and you're talking about a PS ratio that is even higher than Tesla, that tells me that expectations are too high for a company that is not even profitable yet and still has a lot to prove. I think investors are definitely predicting that, or at least they're pricing the stock right now as if NIO is for sure going to be as large as Tesla. And I'm talking Tesla of the future, not just Tesla right now, which I don't think is realistic expectations. And I think that the risk reward ratio is just not favorable at these levels. There's just too much risk and not enough reward potential to really match that. Now, if we were talking about the stock that was, less than $10 a share in the single digits, okay, we're talking about a lot more reward potential there. And so maybe you do take some of that risk. But right now, the risk reward ratio is definitely weighing more heavily on the risk side. And so it's just not looking very attractive to me right now. So just to kind of sum everything up here, I definitely think that NIO stock is in a bubble. It's a pretty big one. Doesn't necessarily mean that the bubble needs to pop or that the stock needs to crash. I really think that the EV market is only going to get bigger in the future and it's going to have a ton of growth. And that bodes very well for all EV companies, especially NIO. And I do really like NIO, but it's a highly speculative stock and it's one that has skyrocketed by so much that I just think buying at these levels just doesn't make a lot of sense from a technical standpoint. And I'm the kind of investor that likes to buy stocks when they're going down and then sell when they're going up. So there's just really no way that I could be touching it at these levels. And I think it's perfectly reasonable for anyone to consider cashing in some profits here, taking some profits off the table. And if you still really like NIO, you could hold on to some shares, hold them very long term, and maybe the company becomes profitable, maybe they execute even better, and there's like less speculation. So you can still add to your position over time as the company improves. Or if the stock happens to go down or even crash, then you could buy more shares at lower prices. So I think it's perfectly reasonable to be thinking about cashing in some profits here. That's what I would be doing. And I'm definitely not going to be buying this stock. I just can't do it. It's just way too high for me. But I still really like NIO. It's one of my favorite spec stocks out in the market. I'll definitely keep an eye on them and I'll give you guys updates whenever I can. But I hope you guys enjoy the video. Let me know your thoughts down below. Let me know if you guys own NIO stock or if you're thinking about owning or if you're thinking about selling. I'd love to hear your opinions down there and I'll try to respond to as many comments as I can. Anyway, thanks again for watching, guys. I really appreciate all the support. Hit the like button if you enjoyed the video and I'll catch you guys in the next one. Take care. Bye-bye.